Shima, hi. I want to come to you regarding the tone which has been there in the current policy. As you have been there in MPC before, I want to understand from you, what is Reserve Bank of India thinking in terms of taking action to pedal growth now?
I think they're looking at expected rise in inflation ahead, and therefore that the expected real rate will be around unity, even at 5.5, and that this should be adequate to sustain growth, along with the continuation of pass-through of past rate cuts. But my own view is that, earlier they had also remarked that inflation is getting anchored around 4%. And core inflation is going to stay around 4%, the governor said in his speech. And over the last more than 12 months, it's been below 3.5, around 3.5. So most research now is showing that headline inflation comes towards core, approaches core in the longer term, which is the most stable trend. So if you look beyond just base effects, then I would expect inflation next year to anchor around 4%, which is the monetary target. In that case, there was room for cutting now, but they have given a very conservative inflation forecast, which suggests that it is better not to.
Yes, sir, definitely. But more importantly, I did not also see any announcement of any divided house or unanimous decision was taken, especially on getting up on the pause mode this time. But talking about inflation, that is going to go beyond the target of 4%. And more importantly, Governor also mentioned about core inflation being above 4%. What is your take on that?
That is what I'm saying. He said core inflation would stay around 4%, but much of that is due to a gold price increase, no? And the base effect of that will wear off. Then the main core inflation categories, as I said, have been around 3.5% for more than a year. So core inflation and other commodity prices have been softening. Firms are finding competition and not able to pass through price increases. Their margins are, they're willing to even take a cut in margins. So I don't think broadly core inflation is going to rise above 4% next year. Yeah. And research, food inflation is volatile. It might rise, but it tends to approach the stable trend inflation in the long term. Even research shows that. So overall, I expect inflation next year, barring some unforeseen global tensions or supply side shocks, to anchor at the target of 4%. Yes? So if inflation next year is at 4%, because core inflation, even the governor is saying, is going to be around 4%. Yeah? And actually, as the gold price in base effect wears out, it might fall below 4%. So that will absorb any food base effects. And overall, I think the success of inflation targeting is that expectations are getting anchored around 4% in firms' price setting and so on. So in that case, there is room for more repo cut today, because at 3.1 inflation and 5.5, the real rate today is still above 2%. And historically, we have seen that whenever the real rate is above 2%, this means the last 15 years, growth slows. And there are many signals of growth slowing currently. So I think a rate cut today would have given more confidence to the economy that monetary policy is sustaining growth.